Hi Team Value, JJ here, welcome back. Well, today we're going to look at the Alibaba news that they've scrapped their planned IPO of their logistics unit Cainiao. Why have they done this and what's their plan now? Let's get into it. Okay, here's the news directly from Alibaba. As you can see, there's a little bit more to it than just scrapping the IPO in terms of what their plans are. They say Alibaba Group announces withdrawal of Cainiao IPO application and proposal to acquire all outstanding shares from Cainiao majority shareholders. So here they're announcing that they're withdrawing the IPO from the Hong Kong Stock Exchange, but they say at the same time Alibaba Group plans to offer minority shareholders of Cainiao an opportunity to sell all of the outstanding shares of Cainiao held by them to Alibaba Group for 62 cents per share, representing a total consideration of $3.75 billion US. Cainiao shareholders may choose to accept the offer and sell their shares to Alibaba Group for a cash consideration or continue to own Cainiao shares. Alibaba Group owns 63.7% of the fully diluted equity interest in Cainiao. So they didn't own all of it, but they are planning to purchase the rest of the shares. After completion of the offer, Alibaba plans to align part of Cainiao's business to better realize strategic synergies with Taobao and Tmall Group and Alibaba International Digital Commerce Group, as well as support Cainiao to execute a long-term strategic expansion of its global logistics network. Now let's have a quick catch up on the Alibaba share price here. We can see that over the last 5 days, it's actually down 3.62%, but it hasn't plummeted after this news. Really, we can see has done too badly. Just in the last day there, in the last session, it was actually up 0.15%. So not too much damage being done there by this. It hasn't ripped or anything, but it hasn't done for a very long time. As we can see here, 6 months, it's still down 16.31% over 6 months, which covers before the year to date. Year to date, it's down 4.24. It's sort of in a channel there, up and down, going nowhere though. It went down to 68 there in late January, mid to late January. So over the past year, it's down 27.25%. And of course, over the 5 years, it's down. It reached over $300 there, and it's down over 76% still. So if we go over here to Alizilla, we can see more of what they're planning. We will look at how it's been reported in the media, but first we'll see Alibaba Group invests for strategic growth with Cainiao share purchase offer. Cainiao will focus on deepening integration with Alibaba's e-commerce businesses and creating more competitive consumer experience. So they talked about synergies before, the synergies between the 6 business groups. Okay, so Chairman Tsai said this: given the strategic importance of Cainiao and Alibaba and the significant long-term opportunity we see in building out a global logistics network, we believe this is an appropriate time to double down on Alibaba's investment in Cainiao, said Tsai. So talk of doubling down here and expanding the group. It is growing well. We'll have a look at the numbers here, but this is one of the units that's been growing really well. Over 25% for, say, the last 9 months as from the last reporting, and 24% in the last quarter, I think it was. We'll have a look at that, but it's growing well. The market has reacted not too badly to this news, which shows that maybe the market thinks this is a good idea. So the offer, which values Cainiao at $10.3 billion US, underscored the company's commitment to investing in and strengthening its e-commerce operations to regain market share and drive growth. And growth is kind of what they need. It's low growth in their 2 main areas anyway, China e-commerce and cloud. Not very impressive growth it's been for the last few quarters. Cainiao covers end-to-end fulfillment, line haul and delivery services to customers worldwide, and they do have a growing international operation. The international part of Alibaba is growing well as well. So both logistics and the international area are some of the biggest growth areas in the business altogether, and perhaps that's why the market has reacted not too badly to this, because as he said, they're doubling down on logistics, which, you know, maybe it wasn't a good idea to IPO it, especially not at the time now. He said before that it's been just a bad time in the market. Now, if you're getting value out of this Alibaba stock episode so far, I'd really appreciate it if you manage to hit that like button to help the algorithm to spread it to more people. It really does work. Thanks. So this is about that strategic shift here, which I've talked about in other videos if you want to go back and see those. But they say here, earlier this year, Alibaba CEO Eddie Wu identified reigniting growth in the company's two core businesses, e-commerce and cloud computing, as top priorities. So I did cover this in previous videos where he said this, and he has laid out clear strategies for each business and elevated a new generation of proven Alibaba leaders into management positions. So yes, there's been a shake-up. And Jack Ma's been speaking out as well. He spoke out in that internal memo, which I made a video about. I'll put that in the description if you want to go back and have a look at that. He's sort of in the background there. And imagine if he did come back, would that boost the share price? If he's allowed to come back, then maybe that's on the cards. We just don't know. That's pure speculation on my part. This remains to be seen as well, but they say, moreover, the company has completed a comprehensive organizational and governance reorganization that has increased the competitiveness of its businesses by becoming highly focused while taking on a more proactive capital management approach to return value to shareholders. We'll see if that happens. They've definitely been doing buybacks. Should they do more buybacks? Well, the share price has been dropping. It's certainly dropped a huge amount. Their market cap's dropped a huge amount. Should they be doing more buybacks? What do you think about that? Let me know in the comments. I certainly think it wouldn't hurt. They've got tons of cash, mountains of cash. So they say the management organization resulted in more nimble and efficient decision making, and we have seen a major positive impact on our business. We'll see in the next earnings, won't we, see what happens there. We are confident that the effects of this reorganization will be reflected in Alibaba's operating and financial metrics in the future. Well, we'll see. That remains to be seen. They can say whatever they want, but can they deliver on that? We have made significant progress in exiting non-core investments and capital returns through dividends and share buybacks. So yeah, more share buybacks, but could they do more? The focus on capital efficiency and return to shareholders will continue without change, he said. Okay. Alibaba initially announced in May 2023 a comprehensive asset restructuring plan that included this Cainiao IPO. At the time, the company believed a separate listing would better reflect the intrinsic value of its subsidiary businesses. Of course, the macro environment went totally downhill. The market environment in Hong Kong's terrible. I'd be surprised if there'd been any IPOs. However, given the market conditions, Cainiao's IPO at this juncture would unlikely garner a valuation that reflects its strategic value to Alibaba's business or achieve the original purpose of unlocking value for Alibaba shareholders. Have you seen the news coming out of China about the economy, the macro environment, and the stock market's been plummeting in many different areas, the real estate market? So this is really not surprising that they've scrapped this IPO, and they've changed their tack, and they're buying back shares of Cainiao and sort of doubling down on it. And it's a growth area, it's a growth business. So these are the segment results. I covered this in the last video, and we can see here, if we isolate Cainiao Smart Logistics, we can see that it's actually the revenue growth year on year is 27%. This is for the 9 months ended December 31st, 2023. So the last quarter that we've got information for. And we can see that for the 3 months, it was 24%. So really pretty impressive growth. But there we can see the disappointing Taobao, Tmall Group 6% and the Cloud Group 3%. So they really want to get that growth up. Those are the biggest areas. We see the revenue there, how big it actually is. The international digital is fairly big too, and Cainiao is fairly big. There's a growth areas. So to spin them off, was it a good idea? Or it's definitely, they probably would have done it if it hadn't been for market conditions. But obviously investors not too disappointed that this has been happening. And just quickly, we'll see how the likes of CNBC, financial media, mainstream media is reporting on this news to see if it's any different. Alibaba scraps the IPO of logistics unit. Cainiao says it will take full ownership. So what they say about it is Alibaba on Tuesday said it was scrapping a planned initial public offering for its smart logistics unit Cainiao, adding to recent woes for the former Chinese tech darling. So fairly emotive language there. The shelving of the planned IPO, which would have been a boon to Alibaba, well, would it? Maybe. Handing it an injection of cash with a key exit deal comes after deteriorating market conditions in China. So there are deteriorating market conditions, but an injection of cash. I mean, they've got so much cash. It's not like they need the cash really at all. They didn't mention that. If you look at how much cash they have, it's a pile of cash. Investors have soured on China of late, worried by a litany of issues, including softer consumption and real estate and debt crisis. That's true. Especially American investors have been exiting the country. There's been news of that. Could it be like Japan? People have memories of Japan. It's taken decades after their real estate and stock bubble will burst at the same time. So could China be like this? We don't know. Or could it rebound? Because the fundamentals of the company aren't bad. Even though there's not strong growth, they've got a lot of cash. Still a strong company. Now, if you've been a subscriber for a while here, or if you're new and you're enjoying it, you might like to try the Art of Value Patreon. Over there, I provide exclusive content. I talk about my stock portfolio, the research that I'm doing at the moment, exclusive content that I don't share anywhere else. I'll put a link in the description for that if you're interested, and maybe see you over there. Now, if you're watching this video on YouTube, I'm going to put a link here to the video that YouTube thinks that you in particular should watch next. So go and see that now if you want to. And thanks to everybody for watching or listening, and I'll see you in the next one.